Hello, class. Hope everyone is fine, as I'm fine too. So last time we were looking at some of the financial tools in financial statement analysis. We looked at horizontal analysis, vertical analysis, where we went ahead to look at comparative balance sheet, which is also referred to as financial position. We looked at something to do with comparative income statement or profit and loss account. Then today, we are going to look at something to do with fund flow analysis as a financial tool in financial statement analysis. So to begin by sharing the screen, here is what we are supposed to be looking at. So we are going to start looking at what is this fund flow analysis as a financial tool. We find that fund flow statement is a consolidated statement of all the cross transactions over a period or over the period in which the flow is being analyzed. So what does cross transactions mean? Cross transaction involves a current account and an current account bring about a change in the fund of or working capital. So in simple terms, cross transaction just involve change in fund over or working capital. You find that some brings about an increase in fund and others bring about decrease in the available funds, which is also referred to as working capital. Then these cross also represented in the funds flow statement are classified or are grouped into two. How do or how are they grouped? Cross transactions are grouped into two, which involves source or inflow of funds or applications or outflow of funds. So what does this source or inflow of funds means? These are just simply transactions which brings about an increase in the available fund or the working capital and applications or outflow of funds. These transactions which bring about a decrease in the available fund of working capital. So here we have two cross transactions which involve inflows is just bringing in, then outflow is going out. So you will find that outflow is something that goes out. Then inflow is something that comes in. So that is the reason why the inflows of funds is just transaction in which bring about increase and outflow brings about decrease. After that, we want to look at how do we prepare these fund flow statements? How can we prepare a fund flow statement? So preparing fund flow statement, steps, rules, and format. So these are some of the things we are going to look at now. Preparing fund flows statement, steps, rules, and format. So if you read about this article, you are going to learn the step, rules, format required for preparing fund flow statement, which schedule of changes in working capital. So first of all, let us look at what are some of the steps in preparing fund flow statement. So these steps involve preparing fund flows, and they are as follows. Number one step of preparing fund flow statement is determine the change, whether it is either an increase or decrease in working capital. That is the first step when we are preparing fund flow statement. First, you determine so that is our first step in fund flow analysis. The second step is determine the adjustment account to be made to the net income. Our first step is determine a change, decrease or increase in working capital. The second step is determine the adjustment account to be made to the net income. Then third step, For each non-current account of the balance sheet, establish the increase or decrease in that account. After determining working capital and net income, after determining an increase or decrease in working capital and adjustment in the account, you are now supposed to determine or to establish increase or decrease in that account. Analyze the change to decide whether it is a source increase or use decrease of working capital. Hope we are together and you're getting this well. Our number 4th step is be sure, and I can mark it in different colors. Be sure the total of all sources, including those from operation minus the total of all uses, equal to changes found in working capital in step 1. So that is the 4th step in preparing fund flow statement. What are some of the general rules in fund flow statement? What are some of the general rules in fund flow statement? So the following general rules should be observed while preparing fund flow statement. The following general rules should be observed, and take note, they should be observed very keenly. Number 1, increase in a current asset means an increase plus in working capital. That is number 1st step. Increase in a current asset means increase plus in working capital. Number 2nd rule, decrease in a current asset means decrease minus in working capital. Decrease in current asset means decrease minus in working capital. Number 3rd rule is increase in current liability means decrease minus in working capital. And you have to take note of all this. Increase in a current liability means decrease minus in working capital. Number 4th rule, decrease in current liability means increase plus in working capital. Decrease in a current liability means increase plus in working capital. Then number 5th rule is increase in current asset and increase in current liability does not affect working capital. Take note, increase in current asset and increase in current liability does not affect working capital. Number 6th rule, decrease in current asset and decrease in current liability does not affect working capital. So what are some of the things which does not affect working capital? Decrease in current asset, increase in current asset, then decrease in current liability, increase in current liability. All this does not affect working capital. Then the last step, the last rule in fund flow, in preparing fund flow statement analysis, is change in fixed or non-current asset and fixed non-current liability affect working capital. Changes in fixed non-current asset and fixed non-current liability affect working capital. So what is the format of fund flow statement? Remember, this is a financial statement analysis tools. And this tool is very important, just like vertical analysis, horizontal analysis, comparative balance sheet, and comparative income statement. So fund flow analysis format is as follows, and you have to be very, very keen of this format. So fund flow statement can be prepared in statement form or T form. A T form means you divide the statement on debit and credit side. So Both of the format are given below. So we are going to start with fund flow statement or in statement form. So to continue with the fund flow statement form, to continue with this form, so number A, sources of funds. This is fund flow analysis. What are some of the sources of fund in finance? We have fund from business operation. We have sales of fixed asset. We have issue of shares. We have issue of debentures. We have long-term borrowing. Apart from these sources of fund, you can get it from donation from friends. You can get from loan. And those are some of the sources of funds. So you have to begin with the sources of funds. Then after getting the sources of funds, let's say that fund flow or funds from business is 10,000. From sales is the same. From issues of shares is the same. So you are going to have the total number of sources of funds. Then you are going to have your total here as your total source of fund. Then number B, applications of funds. How are you going to apply these sources of funds, or how are you going to use them? That is the meaning of applications of funds. After identify the sources of funds, you are going to now use the funds. So sources of fund, you have the total, then you have application of funds. What are some of the applications of funds which we are supposed to look at? You can take payment of tax, we have payment of dividend. You can look at payment of long-term loans, that is as application of fund. You can have purchase of fixed asset, we have redemption of debentures. You can have loss from business operation, that is application of fund. Then you can have redemption of preference shares. So you are going to add the total number of, if you are given figures here, you are going to add their total, then you are going to sum up them up to here. You are going to sum them up to here. So you are going to have your total sources of funds here. Then you are going to have your application of funds here or expenses. Application of funds is that, in a simple way, is that how are you going to use your funds? Then not increase or decrease in working capital. Remember, we had some of the rules that guide us. We had some of the rules that guide us on this. So not increase or decrease in working capital. Total sources minus total use. So like if you are buying a product, this is just but an example, and you are going to sell that product. The thing is, you cannot sell a product at a lower cost. You purchase that product. Automatically, you're going to make a loss. So here, after having funds, then how are you going to use them? Then after usage, you are going to tell total sources of funds minus total uses. That one will give you the fund flow statement. So it is either going to be a decrease in working capital or an increase in working capital. That is that format. Let us look the T format of fund flow statement analysis as a financial statement analysis tool. So in fund flow, in T format, we are going to use this as follows. So number one, we have fund flow. You have to write it on the top center. Fund flow statement, T form. So we have sources of fund on your right side, on your left side, then application funds of your left side. So if you add the figures on sources of funds of all this, let's say you have their figures here. If you add the total, you are going to have the total sources of funds here. If you come to application of fund, you are going to have the total here. So the difference is either increase or decrease in working capital, and you have your fund flow figures. Let's continue. So this is some of the summaries of fund flow analysis. So you find that fund flow analysis is analysis of flow of funds from current asset to fixed asset, or current asset to long-term liability, or the vice versa. The vice versa means current asset, current fixed asset, then current long-term liability to short-term liability. Then what are these? You find that first of all, we make fund flow statement and then study its cause and effect deeply and try to find many important facts and information which can be used in business. It can also solve the following problem. Fund flow analysis can also solve the following problem. Number one, why are the current assets decreasing after getting high volume of net profit? Why are current assets decreasing after getting high volume of net profit? The answer is fund flow statement is made by take 2-period balance sheets. And if we study it, then we can find that it may possible that we are using net profit for purchasing fixed asset. Statement of changing in working capital can also show net decrease in working capital. And I hope you have gotten that very clearly. In simple terms, fund flow statement can make 2-period balance sheet and it can be used for analysis purpose. Number second, why did the company not issue high dividend? Even company had an high profit in the last year. The other is, you know that dividend is given after seeing the level of fund from operation, not net profit. If company has made fund flow statement, then funds from operation will be the source. Then financial analyst should check this amount and suggest board of directors what amount will be suitable according to the revenue performance of the company. So it is not necessary that high profit level will give high dividend to shareholders. Then the last question is, how did the company use the net profit? How did the company use net profit? The answer is, fund flow statement provide a clear picture of sources and utilization of fund. And if we take some adjustment of non-operating items, then we can know the amount of fund flow from operation, and it is compared with the fund use. So it may be possible that we had used it for purchasing fixed asset or repayment of loan. Last, what are the main sources of redemption of loan? What are the main sources of redemption of loan as fund flow is concerned? The answer is, loan is the main fixed liability of business. And if it increased from previous period, then if we study sources of fund from fund flows statement, then we can estimate that whether sources are strong to repay all the amount of loans or not. Suppose if we are taking another loan to repay the amount of payable loan, then it is not good source. But if we had received large money from operation as a source of repayment, then it can be said that it is good source of fund. And that marks the end of our lesson today. Thank you all for listening. May the Almighty God bless you all. Bye-bye.